This is Horizons Middle East and Africa. Our top stories this morning. Colombia capitulates. The U.S. will hold off on imposing tariffs after the South American nation agrees to all of President Trump's terms. Ceasefires in focus. Israel and Lebanon extend their truce while a dispute over a hostage tests the deal with Hamas. And Rwanda-backed rebels reportedly claim to have captured eastern Congo's largest city, Goma. The DRC government calls the advance a declaration of war. It has just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Good morning to you at the start of a new week. And it is going to be a busy week. If these past few hours are any indication, there is a lot for the markets to pay attention to. There's, of course, eco data. There's geopolitical developments, as we were just mentioning. There are some monetary policy decisions that we're paying close attention to, and also tech in focus. We have some of the major Magnificent Seven companies reporting this week, which is why some of the news we're getting this morning about a company called DeepSeek, very interesting for markets. But if we just take a look at where markets are positioned ahead of the trading day, as you can see there, U.S. equity futures under a bit of pressure, and that is coming after we did hear that news from President Trump about Colombia imposing those tariffs. Of course, we did just get some news out of the White House that Colombia has agreed to abide by Trump's terms, but we'll have to see where that takes equities for the rest of the days. But investors are also very keenly focused on what is happening with this China's DeepSeek company and potentially the performance of that company and how it could affect a number of the other tech players in the U.S. Right now, we're seeing NASDAQ futures down more than 1.7%, S&P futures down over 0.8%. Also watching emerging market currencies in focus, only marginally down this morning, but they did close last week with their best showing since July of 2023 on those potentially softer than expected tariffs from Trump. The question is, though, can that continue? And especially as we continue to hear more announcements from the U.S. president. And finally, Brent crude down just over 0.5%, trading just over $78 a barrel. And that is, of course, coming off the back of that U.S.-Colombia tariff rhetoric. And still hearing from President Trump asking OPEC Plus to bring the price of oil down while still asking his own U.S. producers to drill more. So we'll have to see how that plays out. But just want to put into context the significance of the U.S.-Colombia relationship. And that brings me to this terminal chart. The U.S. is Colombia's top trading partner, while Colombia is not even on the U.S.'s top list. But right now, as you can see, the U.S. is running a trade surplus with Colombia. So this is significant for both of these countries, potentially why we're seeing some of the action and the news that we're getting just now. But let's check in on how markets in Asia are faring. It is a shorter week over there, but Avra Hong is standing by in our Singapore studio to give us some updates. Avra, what are you watching?
Yeah, shorter week for some markets in the Asia Pacific. What we're watching today is really how that AI fueling optimism of Chinese shares, particularly the tech names. So we're seeing Chinese shares leading the way. You have Tencent, Alibaba helping to boost the likes of the Hang Seng. The region's gauge, although it might not be that accurate a picture given how many markets in the region are shut today, is headed for its sixth winning streak, succession of gains. And I say, again, this is AI related, but that DeepSeek narrative is kind of taking the shine of these Japanese tech stocks. So we have the likes of Advantes declining about 8% at the moment. It's the tech stocks in Japan that are getting some of their shine taken off, and the big drags on the Nikkei. Also in Japan, the yen gaining ground today among the G10s. It's the only one to do so. Some of this has been attributed to safe haven demand, but also I think investors are kind of heeding the hawkish signals from the BOJ last Friday.
Thanks so much, Avra Hong in Singapore for us. Let's turn back to the U.S. The White House says the U.S. will not levy threatened tariffs on Colombia after reaching a deal over returning undocumented migrants. Colombia's foreign minister says it's overcome an impasse with the U.S. after earlier refusing to let 2 planes of migrants land. For more, let's bring in Bloomberg Asia senior editor Bill Ferries, who's joining us now. So, Bill, this is a fast-developing story. Talk to us about the latest and really these last lines that we've been getting from the White House.
Yeah, this may end up being one of the shortest major trade disputes of recent years. Within about a 24-hour period, we've gone from President Trump threatening an initial 25% tariff on Colombian imports that he said would rise to 50% within a week, to the whole thing being resolved after Colombia agreed to apparently all of the U.S. terms, which were really focused around accepting some of these undocumented migrants who had been picked up in the U.S. and were being sent back. It seems like Colombia's biggest issue with this was that they were being sent back on a military plane with shackles. It's not clear, at least it seems like that Colombia has probably capitulated even on the military plane aspect. There was always a lot more at risk here, at stake here for Colombia. As you mentioned, its top exports, its top trading partner is the United States over China, which is unusual for Latin America. The U.S., of course, it was only a minor player in terms of total imports. But a big dispute. I think it really shows the lengths to which President Trump is willing to go, even against a country that's historically been an American ally, if they disagree with his policies on immigration or other issues.
Bill, how much are we seeing the markets reacting to this?
Well, we already knew that the peso was coming under considerable pressure because of that dependence on U.S. trade. You've seen markets last week had been kind of expecting a big wall of tariffs that never came into place, and maybe we're breathing too easy a sigh of relief after President Trump's first few days. I think what he's made clear here is that this is a weapon he will use. In this case, it was against a relatively minor trading partner. But the bigger risk out there is that he decides to move forward with tariffs on China and even some European countries if they don't go along with his priority policies.
Yeah, starting us off there, Bloomberg Asia senior editor Bill Ferries. Bill, thanks so much for your time. Let's turn to the Middle East. Israel and Lebanon have agreed to extend their ceasefire until February 18th to allow Israeli troops more time to withdraw. Meanwhile, in Gaza, another fragile ceasefire is being tested. The office of Israeli Prime Minister Benjamin Netanyahu says a dispute over a civilian Israeli hostage has been resolved with a deal to release another round of hostages on Thursday. Israel now says the blockade that prevented tens of thousands of Palestinians from returning to the northern parts of the enclave will be lifted later today. The developments come as President Trump floated the possibility of moving Palestinians out of Gaza.
I'd like Egypt to take people, and I'd like Jordan to take people. You're talking about probably 1.5 million people, and we just clean out that whole thing. It's it's over the centuries that's had many conflicts inside, and I don't know. It's something has to happen.
For more on this, let's bring in Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia, joining us from Dubai. So, Stuart, give us a sense of how significant these comments are coming from President Trump, especially just a week into his presidency.
Yeah, I mean, they're significant in that it's the first time we've seen the U.S. administration come out with a comment like this. And, his predecessor had largely been against the idea, not least because of the practicalities of it. You're talking about something between 1.5 and 2 million people. And is it realistic to move them into whole new areas of Jordan and Egypt, even assuming that those two countries would be willing to take them? And so far, all the rhetoric out of those two capitals is they have absolutely no intention of allowing that to happen. And again, it's a logistical question. There is obviously also an underlying issue here with removing people from that area in the first place. That has some deep ethical questions around it as well.
Yeah, and we saw just some of those pictures over the weekend of thousands of people, so I can't imagine how that would actually play out. Stuart, when we talk about Lebanon, there has been a ceasefire that's been extended. What do we know about the threat of Hezbollah across Lebanon's southern border?
I mean, it's certainly diminished. And I think when you listen to the Israeli military about the operations that they've had there over the last several months, they have been eliminating the various infrastructure that's around there. They've been removing weapons, and Hezbollah largely is removed from those areas. However, there are pockets of resistance within there which have not been cleared up. And I think one of the things we saw over the last couple of days is people trying to return to the south. And at least from some of the video images that I've seen, which I have to say aren't necessarily representative of everyone, but as you can see from that image there, there's a Hezbollah flag flying. That obviously gives Israel some pause for thought about the wisdom of pulling out right now. At the same time, we do see an enhanced Lebanese military that could potentially take over and take control, but we're not there yet. And so I think there's some hesitancy there to cede too much ground before there's certainty that the peace can hold once they've withdrawn.
Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia, joining us in Dubai. Stuart, thanks so much for those updates. Let's get back to the markets. U.S. stock index futures took a hit over concerns that an AI model from China's DeepSeek may disrupt the tech market. The AI model is seen as competitive with OpenAI's technology and could challenge the dominance of U.S. chip companies, including NVIDIA. For more, let's bring in Bloomberg Intelligence senior analyst Robert Lee, who's joining us now. So, Robert, we're seeing quite a bit of reaction when it comes to U.S. equity futures. Talk to us about how we got to this point. I mean, what's the news this morning that's really triggering the markets?
Okay, well, DeepSeek's actually been quite well known to Asian investors, or in this part of the world, for the best part of 6 to 12 months. It's a highly innovative Chinese AI company focused on the development of large language models, and it's developed a very innovative new technique or architecture based on something called mixture of experts. So that's allowed them to develop, highly cost competitive and highly computationally efficient models, which have given domestic competition like Alibaba and Tencent a run for their money. And obviously on the headlines we've seen over the last few days or so, it's making more waves in the US. I would say, in fairness, I don't think that's anything particularly new. This story's just been picked up by a number of news outlets outside ourselves. But as you would expect, Bloomberg Intelligence likes to lead on this. We've been writing about this company for the best part of 7 months.
So you're very aware of the company. Robert, does this actually mark a shift in the AI narrative, especially as we await some of these earnings from some of the big companies later this week?
I think, again, for maybe some people in the US who are less aware of this, it certainly is a bit of a wake-up call. But I would say OpenAI and the others have been, well aware of DeepSeek for some time. But again, it just sort of highlights and confirms the argument that we've been making for the best part of last year, that actually the technical barriers to entry on the AI side, so software side, are not particularly high compared to chips or semiconductors, and that actually China has some key inherent strengths in software development in terms of their engineers. Just as a brief stat, the number of Chinese developers outpaces that by the US by a ratio of about 3 to 1. So numbers are important in this industry, and Chinese companies are highly innovative. The whole sort of short video wave that swept the world really started in China. So China has narrowed the gap progressively, and we expect that to continue over the next year. And they are well positioned really as the global number 2 in AI software behind the US.
Fascinating. We'll have to see how those earnings reports potentially we get some mention of this competition. Bloomberg Intelligence senior analyst Robert Lee, thanks so much, Robert, for joining us and for your insights. Up next, here why Bernstein's top pick for 2025 is Japanese stocks as traders digest Trump's order to impose tariffs and sanctions on Colombia. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Asian shares have made gains to start the week, partly on optimism about AI in China, shrugging off Donald Trump's tariff threats on Colombia that cut risk appetite elsewhere. Let's bring in Rupal Agarwal, senior research analyst and director of Asia Quantitative Strategy at Bernstein, joining us from Singapore. Rupal, great to get you on this morning, especially as we're seeing quite a bit of moves as it relates to what we're seeing in AI in China. Talk to us about, from an investor perspective, if you think this is an AI narrative shift more broadly.
Thank you so much for having me. I think very quickly, I would just quickly share, what Bernstein's house view is on this deep stake story that got picked up over the weekend, on multiple social media platforms. Honestly, this is not new. It has been ongoing for some time. It's more to do with, in my view, the fact that a lot of these US big tech names were quite fairly priced. And of course, we are getting into the earnings season. And hence, we are seeing a little bit of this overblown reaction in our view. So we don't think, this is completely new and completely miraculous in terms of the models that we are seeing from DeepSeek.
And Rupal, then we are mentioning the markets shrugging off a bit of what we are hearing from Trump. Do you think investors should be focused then more on the potential tariffs to come from Trump? We saw the reversal with Colombia, but when it comes to investing in Asia, should that still be on the minds of investors?
Oh, absolutely. That has been on the mind of investors for quite some time. In fact, if you look at it, since the Trump's win, we have largely seen a broader macro headwind being created for Asian markets in general. We have been dealing with, or I would say Asian investors have been dealing with a stronger dollar environment, a higher US yield environment, and of course, the uncertainty around tariff risk. So that's always at the back of mind for a lot of, Asian investors. But given the broader uncertainty is difficult, I would say, to only position, with respect to what one can expect. And hence the way that we are recommending, investors to look at in the region this year is to start with this, stocks where you are getting more free cash flow yielding names, you're getting more high dividend yield, because these are the kind of stocks that typically would do well in this broader uncertain environment of, on one day we start seeing a narrative of higher for longer versus the other day, we start seeing a narrative of off the rate cut. So it's going to be an uncertain year, the one which is laced with a lot of volatility, especially with respect to Asian markets. And that's something that we would say is at the back of all investors in the region.
Rupal, you're also quite bullish on the yen, and we are seeing some investors move to the yen as a haven when we see this tit for tat going on with Colombia and the U.S. Can you give us your argument there?
Sure. I would actually say that we are more bullish on Japanese equities. And in fact, we've been very, very positive on the market for the last couple of years. The point that we are trying to make this year is that the Japan domestic economy is likely to continue to strengthen, as well as there has been this big pivot, which we saw last year, right? So BOJ moved towards a more normalized policy environment. We also saw, a lot of your reflationary pressures coming back to the market. So I would say that Japan has moved the corner and moved out of deflation. And some of the biggest beneficiaries of this regime shift is essentially the Japan and domestics. The other added advantage is, given all the uncertainty around the tariff, sort of news, I would say that within the region, the better way to play Asian equities would be to focus on strong domestic stories. And that, again, is where Japan domestics stand out. So that's the reason we remain quite positive on Japan domestics. And what is very interesting is that in the last couple of years, if you look at Japan domestics as a basket, it has actually outperformed the exporters, even though yen has continued to weaken. So I think that's the interesting angle, that in the last couple of years, we have seen that the source of returns in Japan has been more about improving corporate governance, improving shareholder returns, rather than the yen.
How does that play out, though, Rupal, if we do continue to see a stronger dollar and this U.S. exceptionalism continue?
Oh, absolutely. So stronger dollar is always a headwind, I would say, for broader Asian equities. Within Asia, I would say Japan does slightly better in the context of, a stronger dollar. But, it's more about relative to other Asian markets. On an absolute basis, we will, still continue to see pressures if there is a stronger dollar. And hence, that brings back me, to the point that I made earlier. One of the better ways to play Japan or any other Asian market is to look for more domestically oriented companies or sectors, because that is where you would, not be under pressure in terms of the currency.
All right, Rupal Agarwal, Senior Research Analyst and Director of Asia Quantitative Strategy at Bernstein. Great to get you on this morning, Rupal. Thanks so much for your insights. Now, still ahead, we'll discuss Saudi-U.S. relations as Trump asks for more investment and lower crude prices. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Here's a few stories we're following this morning. Pete Hegseth has been confirmed as U.S. Secretary of Defense despite allegations of spousal abuse, excessive drinking, and financial mismanagement, which he denies. Lawmakers voted 51-50 to back the combat veteran and former Fox News commentator, with J.D. Vance casting the tie-breaking vote. It's only the second time ever a vice president's support has been needed to break a deadlock for a cabinet nominee. Bloomberg has learned that Elon Musk has initiated conversations about using blockchain technology at the new Department of Government Efficiency. According to sources, the Tesla CEO has mused about the idea of using a digital ledger as a way to track federal spending, secure data, make payments, and even manage buildings. And the CIA now believes it's more likely that the COVID virus originated from a lab leak rather than a natural source. The new view aligns the CIA with the FBI and the Department of Energy, which say the virus probably leaked from a lab in Wuhan in central China. The announcement comes after President Trump's new CIA director, John Ratcliffe, declassified existing information. And let's just take a quick check at where your markets are just ahead of the trading day. A bunch of red right now on the screen, especially for U.S. equities as they interpret this news from DeepSeek or just get to learn more about it, as we heard from our reporter Robert Lee. NASDAQ 100 futures down more than 1.8%. Eurostock 50 futures down more than 0.6%. There's also a number of Fed decisions, or excuse me, central bank decisions that are happening this week. Eco data and a big earnings week, so a lot to pay attention to cross asset as well. And that's just a quick check at our treasuries there. But coming up, oil fluctuates as investors react to rapid fire moves on trade by the Trump administration. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Colombia capitulates. The U.S. will hold off on imposing tariffs after the South American nation agrees to all of President Trump's terms. Ceasefires in focus. Israel and Lebanon extend their truce while a dispute over a hostage tests the deal with Hamas. And Rwanda-backed rebels reportedly claim to have captured eastern Congo's largest city, Goma. The DRC government calls the advance a, quote, declaration of war. It has just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Happy Monday to you, and it is a busy week ahead. We are following that geopolitical developments across the Middle East and elsewhere. And of course, we do get some monetary policy decisions. We have the Fed, we have the ECB here in South Africa. We will have the SARB and the Bank of Canada. And then, of course, there is big U.S. tech earnings from some of the Magnificent Seven companies that are going to be in focus. But if we take a look at where markets are positioned today ahead of the trading day, a lot of focus is on what we are hearing from President Trump in regards to Colombia and those potential tariffs that he floated there, apparently walking that back, but putting some pressure on across assets, as we can see right now. U.S. equity futures in the red right now, both S&P and NASDAQ 100 futures. But also folded into some of the price action this morning is China's DeepSeek, which, as we were talking to our reporter Robert Lee earlier, it is not a new story for many investors, but it is getting a lot of pickup and leading to some concerns about AI and the progress on AI, and also the competition between China and the U.S. On a key week for U.S. tech. Also watching closely emerging markets right now, their currencies only down marginally right now. But last week, there was a bit of concern as Trump came into office what this would mean for global EM currencies. But they actually closed last week with their best showing since July of 2023 on those softer than expected tariffs from Trump. And Brent crude also in the firing line right now when it comes to the rhetoric around Colombia, down just about 0.7%, trading at $77.97 a barrel. And that is also folded into the Colombia story. And that brings me to this next terminal chart, because it puts into context the significance of this relationship, at least when it comes to Colombia. The U.S. is Colombia's top trading partner, while Colombia is not even on the U.S.'s top 20 list, although there are a lot of factors to be thought about. There's coffee, which is in focus when it comes to Colombia. There's also oil as well. So a lot that we're paying close attention to when it comes to that relationship, and potentially more to come down the road from President Trump. But let's check in on how markets in Asia are faring. Some of the markets over there having a shortened week. Avril Hong, though, is here for us today to give us some updates. Avril, what have you got?
Jen, Chinese shares are being fueled by this AI optimism, so they're the ones that are actually leading the way in Asia-Pacific today. And this is coming in the face of a poor batch of manufacturing PMIs, along with industrial profits that are really inspiring no confidence in the recovery of the Chinese economy, as well as the tariff threat that overhang following developments out of Colombia. Today, it's worth highlighting that some of these stocks that are rallying by double digits are those that have links to DeepSeek. This is, of course, the small Chinese AI startup that, despite using less advanced chips because of US curbs, have somehow managed to come up with a product that's impressive to investors and users alike. So part of this is that concern that it'll kind of eclipse the dominance of what we're seeing in the US when it comes to AI, or at least dent a little bit of that. These are some of the firms that have links to the business model. Merit Interactive, for example, disclosed in its annual report that it uses DeepSeek. So something to keep in mind as we watch these moves in the AI space.
Avril Hong in Singapore for us. Avril, thanks so much. We'll check back in with you later. Now, oil has pared losses as the White House withdrew a threat of tariffs and sanctions on Colombia, saying the South American nation has agreed to all of President Trump's terms, including the return of undocumented migrants. But the president's earlier declaration of an energy emergency still allows him to use wartime powers to achieve his priorities. Let's bring in Bloomberg's managing editor for commodities and energy in Asia, Clara Ferreira Marquez, who's joining us from Singapore. So, Clara, this news was very surprising for many people, just how swift Trump did this in his first few days. Talk us through what exactly he was trying to achieve with this energy emergency declaration.
So you're right. Immediately after his inauguration, this is one of the first things he's done. It's sweeping powers, seeking to look through everything from power grids to coal plants. He has his staffers searching through any loophole and searching for little-known authorities that can help him move things along, really pushing national security boundaries. I think we had a really nice comment in one of our weekend stories that talked about it as power politics in an age of power and not rules. Now, there are some difficulties here for Trump. I mean, for one, emergency powers are usually designed to stop something, not to start it. There are limits on what he can do, and the US is already producing quite a lot. But I think at the root of your question, and I think at the root of what he's trying to do, is really an effort to bring prices down. Now, if he did want to do that, if he was completely logical, he would, of course, look to renewables too. That isn't part of the complex that Trump currently prioritizes.
So, Clara, how do we see this continuing to affect the markets? We were mentioning what was happening with the announcement from Colombia earlier today. How do we see this playing out with the energy markets?
I think the Colombian incident this morning has been a really interesting one. So oil prices have been reasonably high pretty much since the latest wave of sanctions from the US, which of course predate President Trump. Those have pushed, raised concerns about supply. It's forced Asian buyers to look elsewhere. It's pushing prices up a little bit. This morning, however, what we saw was prices coming down, and I think that's really because of what it does for uncertainty. It brings up uncertainty in the market, really people raising concerns about demand. It has shown, especially how quickly it all happened this morning, it has shown the extent to which Trump is happy to use tariffs as a tool, especially for countries like Colombia, which, as you mentioned earlier, has a big imbalance with the US. So it's about 1% for the US, but 30% of Colombian exports go to the US. So clearly it has a very, very strong hand. And I think the market is expecting a lot more of this volatility to come.
Fascinating. Monday morning here. Managing editor for Commodities and Energy in Asia, Clara Ferreira-Marquez, joining us from Singapore. Thanks so much, Clara. Let's bring the news back here, though, to the region. South African President Cyril Ramaphosa has signed a new law making it easier for the state to take land in the public interest with fair compensation. The opposition Democratic Alliance Party opposes the legislation and is preparing to challenge it in court. Let's get more with Bloomberg's Ntando Takwana, who is joining me here in studio. So, Ntando, talk to us about what the signing of this bill really means for the country. This has been pending for quite some time, and which is maybe why we're seeing such a reaction that we are seeing.
Sure. Morning, Jen. So essentially, this law repeals the Expropriation Land Act of 1975. It has been in the process since 2017 when the ANC's President Cyril Ramaphosa's party actually initiated the process to try and address racially skewed land ownership rights in the country. And what it means for South Africa is that government can seize land more easier under two circumstances. One, the legal framework allows for the government to seize land for public purposes, which means for government's use, or in the interest of the public, which means that citizens stand to benefit from the seizure. But this has certainly been a contentious issue for quite a long time. And part of the legal terms of this law allows for the governments to actually negotiate with the landowners if they want to expropriate land. But if they reach a dispute or can't, reach a settlement, then the government actually does have allowance to approach the courts.
And Ntando, I was just taking a look at what the RAND was doing. Not too much reaction yet, but the concern is potentially what does this mean for the government of national unity and their ability to get things done? Could we see ruptures starting to happen now?
I mean, certainly this does expose a bigger crack in the GNU. One could argue that this is the biggest hurdle that they are facing since the formation of the Government of National Unity in June last year. And we've seen the party leader of the Democratic Alliance, John Steenhuisen, saying that he's declaring a formal dispute in the GNU and that he will be invoking Clause 19 of the Statement of Intent that they signed, which calls for a resetting of relations in the GNU. And what that does is dampen investor confidence that has been built up since they, formed this government of national unity, and that likely could see the government of national unity slowing down the key reforms that they have been working on, and that spells really bad news for the economy.
Yeah, and we have the SARB this week, the State of the Nation next week,
and the
budget as well. Bloomberg's Ntando Takwana joining us there with an update. Ntando, thanks so much for joining us. Now, here's a look at some of the other stories we are following in the region. The head of a UN peacekeeping mission says rebels in Democratic Republic of Congo are closing in on a key city aided by the army of neighboring Rwanda. The M23 rebels are about 9 kilometers north of Goma, with electricity and water supplies to the city already damaged. Hundreds of thousands have fled the fighting over the last few weeks, adding to the millions already displaced by conflicts in the eastern part of the DRC. The Associated Press is reporting at least 18 people have died in southern Nigeria after a gasoline tanker explosion. The accident happened along an expressway in the southeastern state of Ngunu after the tanker lost control and rammed into 17 vehicles, bursting into flames. Earlier this month, 98 people were killed in a tanker explosion in north-central Nigeria after individuals attempted to transfer gasoline from a crashed oil tanker using a generator. And Ghana's annual trade surplus reached $5 billion for the first time ever last year as the value of gold exports soared. According to the Bank of Ghana, the excess of goods exports over imports widened from $2.7 billion to the year before. Gold shipments from Africa's top producer increased more than 50%, making up just over half of all exports. And Chevron says its Cabinda Gulf oil operations are running normally after an oil sheen and debris were reported along the coast of Angola. The U.S. company has confirmed a survey of facilities and pipelines is currently underway. Angola's petroleum agency says cleanup operations at beaches in the area are ongoing. Now, coming up, could President Trump's request for $1 trillion in Saudi investment and lower oil prices be an unwelcome distraction for the kingdom's 2030 vision? We'll discuss that next. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. Let's turn to the Middle East and relations with the United States. The Saudi Crown Prince faces a tricky balancing act of prioritizing domestic growth with foreign relations. That's as President Trump has taken Mohammed bin Salman's offer of investing $600 billion in the U.S. and pushed it for $1 trillion. Trump has also asked for OPEC Plus to lower crude prices, which again would hamper the kingdom's ambitions. For more, we're joined by Karen Young, a senior research scholar at Columbia University, joining us from Washington. Karen, thanks so much for being with us today on the show. So I think it's interesting, a lot of reporting about how the relationship between Trump and MBS this time around is quite different than what we saw the first time around. How would you assess it right now, just about a week into the Trump presidency?
Well, thank you, Jennifer. I would say that, first of all, Saudi Arabia is a different country than it was in the Trump first administration. It's been 4 years of really more of a laser focus on this domestic growth agenda, solving the dispute between the GCC states, and really focusing more on, calming relations in conflict in the region, particularly vis-a-vis Iran, rather than starting up problems. They also know how to deal with Donald Trump. They know that commitments like this of increasing investment are going to be music to his ears, that he's quite transactional in his view of the region and particularly of the kingdom. And so I think this is going to be a more articulate Saudi Arabia and a foreign policy, at least from the Saudi side, that will be able to play to the desires of what they expect from Trump.
How do they balance that, though, Karen, with their own desires and ambitions domestically?
Well, I mean, all of this kind of rhetoric of, increasing potential conflict in the region and seeing, the use of industrial policy and tariff policy is very worrying, especially across emerging markets, as that will have an effect on oil demand. But it's also, this is going to be another period of unpredictability. So you have to manage those ups and downs, and the kingdom doesn't want to see that. They want to see, as much calm as possible in the region. They want to see a good relationship with the United States, and they want to go towards those objectives that they've been seeking even within the Biden administration, which were some sort of defense pact or security guarantee. They want to move forward with their civilian nuclear program. And they want to have some sort of technology partnership agreement with the United States. So getting the things that the kingdom wants for its own domestic agenda will be front and center. And doing that doesn't work if we see really upheaval and ups and downs or depression in oil markets, or we see this kind of not sure where the Trump administration is going to go, especially vis-a-vis sanctions or maximum pressure campaign on Iran. So they need information and they need some kind of predictability. And the way to do that, which they learned the first time, is through an information flow. And the best way to get information flow with the Trump administration is direct at the top.
Do you see this $1 trillion rounding number from Trump as just a negotiating tactic? I mean, I wonder, too, from the perspective of the Saudis, how you think they view it.
Well, first of all, the number is completely unrealistic. I mean, if we look at, kind of FDI stock from Saudi Arabia into the United States, it's hovering about $10 billion, right? So we're not even on the scale of investment. Now, there's lots of ways to look at that financial relationship. There's traditional FDI, thinking about like greenfield FDI, building manufacturing facilities, things like that. There's also holdings of the Public Investment Fund in publicly traded stocks in the United States. That's about $26 billion. And then there's reserve assets of SAMA, of the Saudi Central Bank, in U.S. Treasuries, which is about $144, $150 billion. So still, we're nowhere near 600 or getting close to $1 trillion. That would be like the entire PIF plus more being invested only in the United States, which it's not. So, where does this money come from? It'll also be trade agreements. And, the big ticket items that Trump has liked before have been military sales, defense purchases. But, the whole kind of package of foreign military sales that go through the State Department in 2024 to every country were only about $4 billion. Now, of course, other countries can buy privately from U.S. defense manufacturers. But, we are not getting into that range of numbers across all of those kinds of allocations. So what we might see then is just promises, right? Promises of defense purchases and service contracts over a long period of time, 2-3 decades even. I think a big ticket item where Saudi Arabia would be very happy to partner and invest in the United States would be on a civilian nuclear program. And that's probably a wedge into negotiation with the Trump administration to kind of open the door on a dollar term and then get to the materials and the trade items that are most important to the kingdom.
Fascinating. We didn't even get to speak about the Trump Organization's own presence in the kingdom, but perhaps next time. We have to leave it there, though. Karen Young, senior research scholar at Columbia University, joining us with her insights this morning from Washington. Thanks so much, Karen. Now, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, coming up, we'll have more on Trump's trade moves rattling markets following the president's threats of tariffs on Colombia. Stick with us for more of those details. This is Bloomberg. The U.S. dollar strengthened against several currencies after President Trump threatened tariffs on Colombia. For more on the market moves that we're seeing over the past few hours, let's bring in Bloomberg executive editor for Asian markets. That's Paul Dobson joining us. So, Paul, just taking a look at what the markets are doing right now, we haven't yet seen a complete reversal since we got this news from the White House about the latest on Colombia. What's happening here? How do you think investors are interpreting this?
Yeah, hi, good morning, Jennifer. So, as you're rightly saying, we saw the currencies that were trading as a proxy for the Colombian peso, the likes of the Mexican peso, for example, and the rand for that matter, weakening right after the markets opened on the back of these tariffs that Trump threatened and then reversed again for Colombia. And I think the reason that the market has stayed weaker despite that not being put into effect is that now we know Trump is prepared to move and press that tariffs button pretty much at the drop of a hat in order to get the things done that he wants to get done. So it's not just a threat, but we've seen his teeth a little bit more. We know that the threat is real now. And so that's going to leave a bigger risk premium hanging on all of the rest of the currencies, friend or foe, that Trump might move to put a tariff on at some point in the future. And so I think that's why you're seeing the market not really returning to exactly where it was at the end of last week.
Paul, is there any currency that is absolved of some of this sort of friction and volatility?
I think that's a really good question. Right now, we've got a stronger yen, but I feel like that's probably partly because people may be unwinding some carry trades where they've been selling the yen in order to put money into some of those higher yielding emerging market currencies. Plus, we had the Bank of Japan hiking interest rates at the back end of last week as well. I don't think there's really any particularly safe corner in the FX world because Trump has said, you know, we're looking at Canada, we're looking at Mexico, which are close trading partners. We're looking at Europe, which is a pretty big block and area and region that could also be subjected to tariffs. And there's a global threat as well. So people will look to find niches where they might be relatively shielded. But on the whole, you know, if we do get universal tariffs or if we do get, you know, an escalation of sort of friction in global trade, then that's going to hurt all of the global economy and probably the US least of all, and then everything else relative to that.
Yeah, we'll watch that very closely. Bloomberg's Paul Dobson joining us in Singapore. Paul, thanks so much for joining us and for the update there. Let's take a quick check at where markets are positioned. We've mentioned a few of the headlines that investors are interpreting this morning. That includes those tariffs that the U.S. had initially imposed on Colombia, reversing on that. And then, of course, there's optimism around artificial intelligence in China, potentially what that means for U.S. tech, especially on a big week for mega cap stocks that are reporting earnings today. Will be in key focus. But right now, U.S. equities down quite substantially, and the Eurostock 50 futures also down just about 0.5%. And we're going to be paying close attention to all of that in the next hour, so stick with us. We are discussing volatility and investor sentiment as tariff threats roil markets with Ayesha Tariq just shortly, and I'll be joined by Lizzie Burden. But stick with us. I'm Jennifer Zabasaja in Johannesburg. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Colombia capitulates. The U.S. will hold off on imposing tariffs after the South American nation agrees to all of President Trump's terms. Ceasefires in focus. Israel and Lebanon extend their truce while a dispute over a hostage tests the deal with Hamas. And Rwanda-backed rebels reportedly claim to have captured eastern Congo's largest city, Goma. The DRC government calls the advance a, quote, declaration of war. Good morning. It is just gone at 9 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Lizzie Burden in London, where it's just gone 5 a.m. Welcome to the second hour of Horizons Middle East and Africa. Good to be back with you, Jen, after this weekend. I mean, it was kind of blink and you'd missed it, these Trump tariffs, but the market's still feeling the impact.
Absolutely. And I think we were just speaking to Paul Dobson, saying that maybe this is the start of a lot of volatility that we're potentially going to see here. Of course, this week is a big week for monetary policy decisions. We've seen Trump plead with Fed Chair Powell to bring interest rates down. So where does that go? Geopolitical developments, big tech earnings. So a lot for the markets to digest. But let's just take a look at where they are right now, positioned ahead of the trading day, getting some pressure, feeling the pressure, U.S. equity futures, at least right now. And that is coming after we did hear that initial news from the White House about the tariffs against Colombia. Again, as we mentioned just earlier there, reversing that decision. But still, U.S. equity futures under pressure, as you can see there. S&P futures down just over 0.9%. NASDAQ 100 futures over 1.8%. And there's also the story about China's DeepSeek performance potentially affecting AI across the board. We do have a big week for the Magnificent Seven. So the question is, will this increase competition for some of these big players? I'm watching closely what's happening with the emerging market index, down just about 0.2%. But last week, we actually saw the index with its best showing since July of 2023 for the week on those softer than expected tariffs from Trump. But if Colombia is any indication, potentially we'll continue to see some more ruptures and announcements there. Brent crude also moving this morning down just about 0.7% on that U.S. Colombia tariff rhetoric. And that brings me to the relationship between these two countries and just the context that this terminal chart is showing. The U.S. is Colombia's top trading partner, while Colombia, it's not even in the U.S.'s top 20 list, though it is significant for a number of exports, including coffee. There is also, of course, oil. And as our very astute producer producer, Ernest Tang, told me it's actually very important for the export of roses on Valentine's Day into the U.S. So it's a significant relationship nonetheless. And so it will be interesting to see how markets potentially continue to digest this news and any other further tariffs that could potentially come from the White House. But let's dig into the markets even more with Ayesha Tariq. She's the co-founder at MacroVisor, and she's joining us now. Ayesha, always great to speak with you. So talk to us a bit about the past week that was. We were mentioning Trump has made a lot of announcements that the markets are trying to digest. What are you choosing to focus on in terms of your investments?
Hi, Jennifer. Thank you for having me back. It's good to see you again. So yes, a very interesting week. And just as you were saying, a lot of volatility. And I think this is sort of how things are going to be, right? There's never a boring moment in a Trump presidency. So I think what we're seeing is something that we kind of expected going into the inauguration, that, you know, President Trump is, after all, a businessman. For him, the stock markets are very important. The performance of the stock markets are very important. And he would sort of dial back a little bit of that tariff rhetoric, right? And that's exactly what he kind of did. He softened his stance a little bit, particularly towards China. And that sort of got the market going with the idea that maybe things are not going to be as dire as the market thought, right? But at the end of the day, I think we're going to have this, you know, sort of like a sword hanging over our heads. And as we just saw over the weekend, the threats are still there. So we still see that there is inflationary pressure coming out of this. And that's something that we'll be watching, particularly with regard to, you know, the longer term yields moving up.
Ayesha, does he have any sway, though, on the Fed? We were mentioning some of the commentary he has made towards Jerome Powell. We have the meeting later this week. How does that play out in your mind?
So I don't think he does, and I don't think he should, right? The Fed is an independent institution, and I think Chair Powell has made this abundantly clear that he's not going to be swayed by any administration. Now, it's easier said than done because there's always a little bit of, I wouldn't say coercion here, but I would say a little bit of a push, right? But I think the Fed recognizes that they've made a few mistakes in the past. They haven't hiked fast enough when inflation sort of hit. And I don't think they're going to make that mistake again. At least we're all hoping that they don't. They've already cut 100 basis points, which is quite a lot in the context of things. And they've been proven wrong about the labor market. Right. So right now, I think their focus is going to be on inflation and all the inflationary pressures that come with Trump's presidency.
Ayesha, Lizzie here in London. I want to ask you about these Colombia tariffs, or the threat of. It seems like that threat is still hanging over global markets this morning. So when you think about FX, where do you find safety when tariff threats like these could come at any moment?
So, Lizzie, I think more than it's the threat of tariffs, I think it's the uncertainty. And that was our theme for the year going in. The markets are roiled by uncertainty. It's not so much a 25% or a 30%, but what may or may not happen. We don't know for sure. And that always brings with it, you know, risk aversion. Right? Now, to your point, I think the best place to hide would be the US dollar. We know the Fed isn't cutting as drastically as they had laid out before, and that will sort of keep the US dollar strong, as well as the inflationary pressures coming in will likely keep the US dollar. That would be my call for the next couple of months, at least.
OK, so you're still long dollar. It was interesting as well that you said how conscious Donald Trump is of the stock market performance. That's kind of a scorecard to him. Do you think that that is so much the case he isn't going to go all in when it comes to immigration policy? Because traders don't seem to be pricing in the possibility that he would go all in on immigration policy. Are they underestimating that risk?
I think they are a little bit, and I'll tell you why. Because I think immigration is slightly different from the tariffs or the taxes, which have a more direct impact on the stock market, the immigration risks are sort of a roundabout risk, right? So they're not a very direct risk. And by the time the immigration risk starts to show up in the numbers for companies, it's going to take a bit of a time. And I still do believe that this is a topic that's pretty close to his heart. If you noticed, some of the first executive orders that he did sign was with regard to immigration and border protection. And so I think he's going to go ahead with those. And that's something that we actually should be looking at as well, because it does create the risk of a wage spiral and, higher wages across the board for a great many companies.
Ayesha, really quickly, you say that it is time to focus on China. We were talking about DeepSeek. It isn't new for a lot of investors, but we are seeing some of the reaction today in the markets. But at the same time, we did get a bit of data earlier today from China. What's the convincing argument for now to invest into China?
So I think where we stand right now, we're at a precipice, let's say. We do still need to see quite a bit of that stimulus come in. We need to see a little bit more in terms of monetary policy cuts, maybe another 50 to 75 basis points. That's where we're looking. But at the same time, I think we're seeing some growth come in. We're seeing the market sort of firm up a little bit. So some of that stimulus measures that were announced last year seem to be working so far. And if we don't have this threat of, a massive amount of tariffs, and there's a friendlier policy between the US and China, we think that would be a good place to invest in. And what we're watching for that would be sort of proxy bets, right? So European luxury, we'd like to look at say Starbucks, Nike. Some of these companies are more proxy bets for how China may be doing.
Ayesha, it's always really great to get your insights on the show. Appreciate you joining us. That's Ayesha Tariq, co-founder of MacroVisor in Abu Dhabi, for us this morning. Now, coming up, Colombia backs down after President Trump orders tariffs and sanctions in response to the refusal to allow military planes carrying deported migrants to land. Details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, the White House says the US will not levy threatened tariffs on Colombia after reaching a deal over the returning of undocumented migrants. Colombia's foreign minister says it's overcome an impasse with the US after earlier refusing to let 2 planes of migrants land. For more, let's get into it with Bloomberg's Asia senior editor, Bill Ferries. Bill, I say Blinken, you'd have missed it. Tariffs were there, now they're not. They've reached a deal. Just talk us through the dispute and what it was really about and where we are right now.
Yeah, certainly one of the shortest trade disputes we've seen, and definitely in recent years. This all unfurled. Yeah, you could have gone to bed last night and not even known that there was something brewing. When Colombia refused to accept 2 U.S. military planes carrying migrants that the U.S. was deporting, President Trump struck back pretty quickly and pretty hard, announcing 25% tariffs that would go into effect very soon. And he said that those tariffs would rise to 50% within a week if Colombia didn't back down in this fight. Colombia is the U.S. is Colombia's biggest export trading partner. It had very little leverage in this fight, and it also gave President Donald Trump an opportunity to showcase that his threats were not just bluff, that he will institute tariffs on very short notice for almost whatever reason he deems fit. So this has resolved already within a matter of just hours. The White House announcing that Colombia backed down, and Colombia's president, in fact, reposted the White House press secretary's statement on social media. So a very quick turnaround, but also a warning for other countries out there if they cross this administration.
Well, yeah, and it seems obvious that Trump's picked Colombia, the little guy, you could say, because Colombia would have to capitulate given the weight of their trade balance. If you think of it like that then, Bill, who's the likely next target, the next Colombia when it comes to these tariff threats?
Well, the big question is what happens with Mexico, right? Because they also refused to have American military planes landing in their territory. They said the fact that they were military planes, whether they're with migrants or not, was the deciding factor. So Mexico, obviously a much more important trade partner with the U.S., a lot more complex of a relationship. So we're waiting to see whether there's a little more diplomacy that takes place between the U.S. and Mexico over this dispute than what we saw with the Colombia case.
Indeed, the Mexican peso is still the collateral damage of this Colombian tariff threat. Bloomberg Asia senior editor Bill Ferries, we thank you.
To the Middle East now, Israel and Lebanon have agreed to extend their ceasefire until February 18th to allow Israeli troops more time to withdraw. Meanwhile, in Gaza, another fragile ceasefire is being tested. Israel says a dispute over a civilian hostage has been resolved with a deal to release another round of hostages on Thursday. It now says the blockade that prevented tens of thousands of Palestinians from returning to northern parts of the enclave will be lifted later today. The developments come as President Trump floated the possibility of moving Palestinians out of Gaza. Donna Kraish, Bloomberg's UAE bureau chief, is joining us now. So, Donna, President Trump getting a bit of heat from Arab Americans for Trump, many of the people who voted for him in the last election after these comments. How would you assess how significant these are, though, for him and for the current situation?
Good morning. They are very significant. I think this is the first time Arab countries have heard this, very direct and blunt comments to take on more Palestinian refugees. Israel, at the beginning of the war that broke out after October 7, had also tried to convince Egypt to take some Palestinian refugees through the border into the Sinai Desert in Egypt. And we saw Egypt rejecting this outright, saying that Israel should take them to the Negev desert. Now, also, we saw Egypt coming out to say we have an unwavering support firm for the Palestinians to establish a Palestinian state. And Jordan's foreign minister was having a presser also yesterday, Mohammed Safadi, and said that, and I quote, Jordan is for Jordanians and Palestine is for Palestinians, and reiterating that Arab countries and Jordan want to see a Palestinian state as the only solution to this problem that has been roiling the region for decades now. Now, this is very sensitive for a lot of Arab countries, right? Because they feel that if they take on more Palestinian refugees, and President Trump was said 1 million or 1.5 million, that means that there is no going back to them. Now, it's not very clear whether this means, it's a post-Gaza plan to empty Gaza, as also the president had signaled, or whether this is part of the reconstruction effort. You move them and then you bring them back. But this is all very uncertain. But for Arab countries, this is definitely concerning and a signal that something might be brewing behind the scenes. And it remains to see how the Arab League or, a unified Arab stance would be for this. But for now, we've saw Jordan and Egypt, those two who are mainly concerned, saying no and rejecting this outright, despite their close alliance with the U.S.
And Donna, happening at the same time, we mentioned the ceasefire in Lebanon has been extended. Does that mean the threat on Lebanon's southern border is eliminated? There was still some violence over the weekend. So where do things stand?
I wouldn't say completely eliminated. And it's a question of when does Israel think its borders are safe enough to withdraw from the areas that they had occupied in South Lebanon and allow for the Lebanese army to come in. Yesterday, there was a lot of tension on the border with residents, also a lot of them holding Hezbollah flags and roaming around in the streets, whether it be it in Beirut or in southern Lebanon, just wanting to come back to their towns. And we saw a clash, a direct clash. There was like a zero distance between them and the Israeli army. We saw the Lebanese army trying to ease the situation a little bit and the tensions, and accompanying some of these residents back to their towns as the Lebanese army was deploying and taking over. This will remain very tense, I would say, until February 18, which is when the ceasefire should expire and whether we should see another extension. Though it's hard to say whether Hezbollah's threat, arsenal-wise is still there. Israel did destroy, significant portion of that arsenal during the war, the 2 months war, but Hezbollah's political sway and even among residents is still very strong. As we saw, many were chanting Hezbollah slogans and heading towards these southern villages. So perhaps arsenal-wise they have been destroyed, but their influence on the ground in South Lebanon is still very much strong.
Donna Quraish, Bloomberg's UAE Bureau Chief, joining us there in Dubai. Donna, thanks so much for your time this morning. Now, coming up, emerging markets are in focus after the threat of tariffs roils the markets. That's next. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Johannesburg. The U.S. dollar strengthened against several currencies after President Trump threatened tariffs on Colombia. For more on the market moves that we've seen over the past few hours, let's bring in Bloomberg executive editor for Asian markets, Paul Dobson. So, Paul, walk us through some of the moves we're seeing. I was just taking a look at the MSCI Emerging Market Index. It's marginally down, but I mean, how would you interpret how EM is moving? EM currencies are moving in reaction to this news.
Yeah, good morning, Jennifer. So last week, we kind of lulled into that sort of false sense of security, maybe that Donald Trump was going to go easy on these tariffs and that markets could continue to flourish as a result. So we had a pretty strong week for emerging markets, along with a lot of the other things, and we saw a much weaker dollar. Now, at the start of this week, we've got that reminder from Trump that tariffs are definitely an option. There's something on the table for him to turn to with relatively, kind of little push. The fact that he was so quick to say that he was going to put those 25% tariffs on Colombia, albeit he reversed them, but the fact that he was able to show that that was a tool that he was going to turn to pretty quickly was enough to shake the markets out of that reverie a little bit, get people a little bit more worried again, make people realize, yes, this is definitely something that he's willing to do and something that is hanging over all of the markets. So as a result of that today, we have that stronger dollar, we have emerging market currencies carrying that little bit more of a risk premium from Mexican peso to rand and across the board, really.
Do you think, Paul, then all of the concern is fully priced in now that we've seen sort of this situation with Colombia and potentially more to come?
I think that the situation is still fraught because you have that sort of Damocles of the tariffs hanging over markets. It was interesting. I saw there was a note from Friday from Goldman Sachs talking about the euro, a developed market currency, but saying that that had a premium priced into it as a risk of tariffs. 2/3 of that premium had come out of the market pricing. So now I wonder whether the market wants to put a little bit more of a risk premium back into things because it's been reminded that, yes, tariffs are possible at any time and certainly not off the agenda from the Trump administration at this point.
All right, we'll leave it there. Thanks so much, Paul Dobson, our executive editor for Asian markets, joining us from Singapore. Paul, always great to get you on. Thanks so much. Now, let's just take a quick check at where the markets are trading or positioned ahead of the trading day right now. We are still seeing quite a bit of downside for equities, and in particular, NASDAQ futures now down more than 2%, and also S&P futures down now over 1%. And a lot of this is coming off the back of that news about the tariffs between the U.S. and Colombia. But also, it is a big week for mega cap or the Magnificent Seven and key tech stocks in the U.S. So perhaps some investors are interpreting what we're hearing from China's DeepSeek and looking into that and trading on that. But Eurostock 50 futures also down just about 0.7%. As are Dow Jones futures down just about 0.4%. We're also paying close attention to what is happening with Bitcoin. We're seeing Bitcoin now down more than 4% as well. And so potentially our MLive team says that Bitcoin potentially is looking at quite a shaky week coming up. Not great news, though, for President Trump, who has, of course, touted being the crypto president. And let's just finish on oil, of course, because oil is, of course, course, folded into a lot of the geopolitical developments we've been paying close attention to in the Middle East, and also, of course, with Colombia. Brent crude now down almost 0.8%, trading to about $77.89 a barrel. Now, coming up, South Africa's president signs off on a new land expropriation law. We'll unpack what it means for the country's land ownership rights next. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Colombia capitulates. The US will hold off on imposing tariffs after the South American nation agreed to all of President Trump's terms. Ceasefires in focus. Israel and Lebanon extend their truce while a dispute over a hostage tests the deal with Hamas. And Rwanda-backed rebels reportedly claim to have captured eastern Congo's largest city, Goma. The DRC government calls the advance a declaration of war. A very good morning. It's just gone 5:30 a.m. in London. I'm Lizzie Burden.
And I'm Jennifer Zapasaja in Johannesburg, where it's just gone past 7:30 a.m. Welcome to the second hour of Horizons Middle East and Africa. And quite a busy week we have coming up, Lizzie, with monetary decisions. There's eco data and there's big earnings to pay close attention to.
Yeah, loads on the docket, but even before all of that, Blinken, you'd have missed it. We've had this rupture in the markets over the Colombia tariff threat. Yeah. Then they reached a deal, and yet the spectre of that threat still hanging over these markets, Jen. And really, is that a sign of the volatility to come in 2025? If we look at these markets as they stand, you had the Mexican peso taking a beating this morning, oil getting whacked as well. We already saw its first weekly decline of the year off the back of the sanctions threats on Russia, the tariff threats as well. But there you're seeing Brent currently $77 a barrel, so 0.8% down. US futures pointing lower by 1.1%. But that's also because of these fears that China's DeepSeek could disrupt the tech world, which is, of course, not just a fear, it's a hope if you're over in Asia. On the MSCI Asia Pacific Index, though, you're still seeing declines down 0.1%. So really last week, the best start to a presidency in stock market terms since Ronald Reagan. But this morning in markets, very much a reminder that volatility and uncertainty lie ahead. If we just flip the board, though, I want to bring you a terminal chart on Trump's tariff threats on Colombia, because Bill Ferries was alluding to this. If you look, it was very much a David and Goliath situation. So the US actually runs a trade surplus with Colombia. There's very little wonder why Colombia, therefore, capitulated to his demands. And you can see in this chart the flows in 2023. The US is Colombia's top trading partner, but Colombia's not even in the US's top 20 list. And Jen, I heard you mentioning it before. It's a good job they've sorted it out just in time for Valentine's Day because, of course, a key Colombian export is flowers. And we wouldn't want anything to get in the way of romance, would we? But let's get back to the oil story, because yes, oil is paring some losses after the White House withdrew the threat of tariffs and sanctions on Colombia. It says that the South American nation has agreed to all of President Trump's terms, including the return of undocumented migrants. But we have to remember the president's earlier declaration of an energy emergency still will allow him to use wartime powers to achieve his energy goals. So let's talk about this now with Bloomberg's Stephen Stapczynski. He's in Singapore. Stephen, good morning. I wonder just how central is energy for the Trump administration, given all the many, many executive orders he was signing on day one?
Well, a lot of those executive orders were energy related. I mean, I think if you look at this time in the White House versus the previous time, Trump does appear to be using energy quite broadly across the board as a way to really push forward his goals. So there are two approaches, right? There's the domestic and then there's the overseas part of it. Domestically, he wants energy prices to be as low as possible because he understands his base. Gasoline prices are low, great. The price to heat your home lower, fantastic. all of those things, anything that could be deflationary or anything that could curb inflation is what he wants to attack. Now, on the overseas side of it, right, you have this as a potential way to reduce trade deficits with other countries. The U.S. is the world's biggest crude oil producer and the largest exporter of liquefied natural gas. So he wants to use that as a way, potentially get other countries or get blocks. The European Union, for example, he's threatened tariffs against them if they don't buy more U.S. oil and gas. And that's all of this to him is central in, hey, we need to produce more oil and gas at home. We need to increase the pipelines. We got to get power plants online. This is all part of his sort of strategy to, one, reduce the cost of things at home, and then two, get people to do what you want abroad.
But so that's the strategy. It's easy to say drill, baby, drill. But then what about the implementation? What can the White House actually do to produce more fossil fuels or sell more fuel abroad?
Yeah, it is challenging, right? So this the energy emergency that he's implemented could use kind of Cold War era rules to kind of push through certain pieces of infrastructure. For example, oil and gas pipelines. It's been very hard to build more of those in the United States because of all of the ability for states to block them. I'm from New England. I'm from the Boston area. Boston actually imports liquefied natural gas because there's not enough pipeline infrastructure to get cheaper shale gas into that region. That's something that maybe he could push through, but it would be difficult still because there would be so much opposition from local communities. He could also push through building power plants or power purchase agreements or fuel agreements with the Department of Energy. There are different ways he can do that, but again, it is still challenging because the U.S. It's home to a lot of private companies, it's capitalist, it's markets. So if you don't have these private producers boosting production themselves, it's hard for the White House to really encourage more beyond that.
OK. Stephen Sapczynski in Singapore, we thank you for that analysis.
Let's turn to the region now. South African President Cyril Ramaphosa has signed a new law making it easier for the state to take land in the public interest with fair compensation. The opposition Democratic Alliance Party opposes the legislation and is preparing to challenge it in court. Joining us for more on this is Tanveer Jeewa, a lecturer at Stellenbosch University who also lectured on property law. Great to get you on, Tanveer. Thanks so much for joining us. So maybe for the global audience, you can explain how this law differs from what we've seen in the past.
So thank you so much for having me. So it's important to note that the previous legislation was actually 1975 Expropriation Act. So this is what we call the apartheid era legislation, which is the legislation under which a lot of expropriation has already happened. So expropriation is not new in South Africa. It's been here since the Union of South Africa. But the difference is that now we have introduced a certain contentious section in the legislation, which is mostly that there are certain instances under which you can expropriate the land for nil compensation, but it has to be just and equitable, and the factors are actually quite narrow and still has to be decided by a court. But this is quite new, and it's causing a lot of havoc in South Africa at the moment.
What's the effect then, Tanveer, on the economy if we do actually see this pushing through?
So I think it's a bit of a smoke screen. A lot of people are panicking about the effect of the economy. But if you actually read the legislation, you will realize that the situations under which nil compensation is allowed are quite narrow. What do I mean by that? Just to give you an example, the land can only be expropriated, for example, if it causes a health risk to the people who are living there. And under these circumstances, it's important to know that it wouldn't be your home. For example, it wouldn't be a thriving business that would be posing a risk to the health of the property owners or people who are on there. Another example would be land that has been abandoned for years. And what I mean by abandoned was if the landowner has not paid municipal rates, but also to realize that under the previous law, the 1975 Expropriation Act, the state could already expropriate land for land reform purposes under market value. The state has chosen, however, to very, very sparsely use that power. So it has barely expropriated land for land reform purposes. And even when it has expropriated land, for example, to build a school or a road, it has chosen most of the time to compensate the property owner for more than market value, right? For more than the landowner would have gotten if they had chosen to sell the land. So it's really not the scare or the panic that we should be having about the economy, but more of asking ourselves whether this is just a distraction and a symbolic move for the government, and whether it will actually come to fruition in terms of practice.
When you talk about symbolic, Tanveer, many people are talking potentially about this is going to start showing some of the fractures in the government of national unity, right? And the investor confidence could start eroding. What exactly do you mean by it?
So we have already seen the fractures with the government of national unity and before this act as well. But the issue that we're having, for example, you've mentioned that the DA is going to the constitutional court, or rather to the court, to challenge the constitutionality of the act. So mostly what has been happening is that the DA spokesperson has said that this is the president going behind the back of the government of national unity, stabbing them in the back, betraying them, and mostly putting forward law that is against the DA's policy and values and ideology. But it is important to note that this law was actually passed by Parliament on the 19th of March of 2024. So that was before the government of national unity was even passed. And it's important to note that at this stage, when the president has the law in front of him, the bill, the president has two options. Can ask the legal consultants, his legal consultants, for their legal opinion on whether the law is constitutional. And if he finds that it's constitutional, he signs it. And if he is not sure of the constitutionality, he can return the law to the constitutional court and ask for the court's opinion. It is only then, if the court finds that it is not constitutional, that the president can refuse to sign the law. The president cannot simply just go and ask opposition parties for their views. And we're talking about back when the government of national unity was not yet passed. So it's important to note that this is not a matter of politics, but we're talking about law and what the president was supposed to do. And he did what he was supposed to.
And Tanveer, just finally, we've talked about how the president is trying to turn South Africa into a construction site, which, again, many investors were looking forward to that potentially. Does this get in the way of that, potential court challenges that we see?
So in essence, for now, the act remains into place until the court has spoken on the constitutionality. And even then, it has to go all the way to the constitutional court for the court to say that there's a problem with the law. But we need to remember that this law is very procedural in nature. It is not so different from the 1975 Act, except for the nil compensation section, which is a minor section. And as I said, we haven't seen a lot of political will to even use expropriation for land reform to begin with. So to see it now would be very surprising. So I would very much be surprised to see that it actually causes a dent in either land reform or the economy of South Africa. There's just been a lot of panic around the act. We need to remember why. It's because South Africa has tried to implement changes in its property regime since 2008. And even this particular act has been in parliament for 5 years, which is extremely long. So since 2008, we have tried to have a new expropriation act simply to replace the apartheid expropriation act. And I think that's a big reason why property owners and other lobbyists are actually taking such huge issue with the fact that this act has come into play.
It will be interesting to see how this plays out, and potentially if we hear the president speak about it at the State of the Nation next week. We're going to leave it there, though. Tanveer Jeewa, lecturer at Stellenbosch University, who also lectures on property law, joining us. Thanks so much, Tanveer. Great to get you on this morning. Now, coming up, Rwanda-backed rebels claim they have captured eastern Congo's largest city of Goma. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Rwanda-backed M23 rebels claim they have captured eastern Congo's largest city of Goma. The United Nations has described a, quote, mass panic among its 2 million people, and Congo's government says the rebel advance is a, quote, declaration of war. For more on this, let's bring in Bloomberg's Indira Oganga, who is in Kigali for us following the story. So, Indira, walk us through how the situation in eastern Congo has escalated like this in the past few days.
Hi, Jen. This fighting has really taken a different turn in the last couple of days. Let's take a look at the last 24 hours, for example. On the 26th of January, Bloomberg reported that the M23 rebels were just 9 kilometers north of Goma. On the 27th in the morning, we woke up to news that M23 rebels have seized the town of Goma. And they posted on their X saying, "We urge all residents of Goma to remain calm. The liberation of the city has been successfully carried out." Goma is a town near the border of Rwanda, and it's a key trading hub. And this cessation or seizure by M23 rebels could mean that there could be full war prospects that we could be looking at. You also have M23 rebels that have seized control of the airspace in DRC, and they've blocked all movement of people and humanitarian aid in and out of this city. And you have the UN saying that water, electricity infrastructure has been damaged. Humanitarian aid workers are running out of money. Then you have people. Goma was one of the last safe havens in the eastern part of DRC. People are fleeing, not knowing where to go. Their children and whatever belongings they could pack on their bags. The UN says at least 178,000 people have been displaced since January. And from the recent fighting that we've seen, 3 peacekeepers from South Africa and Uruguay have been killed and 11 have been wounded.
And Indira, we were just talking a few days ago about Rwanda and the DRC and potentially Turkey helping to mediate some resolution between the two. What does this latest development then mean for that?
Tension is fast rising between the two countries. You have the government of DRC that accused Rwandan troops of crossing the border, terming it as a declaration of war. You also have Congo, the US, and the UN accusing Rwanda of backing M23 rebels, not only with weapons, but also boots on the ground. The UN also says that Rwanda has been using GPS jamming and spoofing equipment that is blocking relief efforts. And because M23 have now seized Goma, they control the world's largest deposit of tantalum ore that is used in portable electronics. And these minerals are being shipped to Rwanda and then loaded into the global ecosystem, according to DRC. And they're asking an embargo to be placed from gold and coltan that is coming from Rwanda. On the other hand, Rwanda is responding. The ambassador to Rwanda, or rather the ambassador to UN from Rwanda, says Congo's inability to govern itself and control active armed groups is the root cause of problems in that country. The Ministry of Foreign Affairs also in Rwanda has released a statement criticizing the lack of context in the statements that are being put out there. They're saying they're misguided and manipulative. Rwanda is being scapegoated, but all in all, Rwanda remains to a peaceful process and finding peace in DRC.
Concerning pictures out of there, but appreciate your reporting. Bloomberg's Indira Oganga in Kigali, Rwanda, following that story for us. Now, here's a look at some of the other stories we are following this morning. Ghana's annual trade surplus reached $5 billion for the first time ever last year as the value of gold exports soared. According to the Bank of Ghana, the excess of goods exports over imports widened from $2.7 billion the year before. Gold shipments from Africa's top producer increased more than 50%, making up just over half of all exports. And Chevron says its Cabinda Gulf oil operations are running normally after an oil sheen and debris were reported along the coast of Angola. The U.S. company has confirmed a survey of facilities and pipelines is underway. Angola's petroleum agency says cleanup operations at beaches in the area are ongoing. Now, coming up, the world's biggest container carriers are going to their separate ways. The breakup of the Maersk MSC2M alliance is the focus of our big take today. We have the details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now to our big take, which is all about shipping. The alliance between Maersk and MSC Mediterranean shipping is coming to an end, with MSC pursuing a traditional solo approach to container shipping. Meanwhile, Maersk is forming a new alliance with Hapag-Lloyd that will be focusing instead on schedule reliability. For more, let's bring in Paul Wallace, who leads Bloomberg's MENA economy and government coverage. Good to see you, Paul. Well, I wonder what led to this breakup. We've been talking about romance on the show. How did we get to this point?
Hi, Lizzie. Well, it's been an alliance. It will break up towards the end of this week, on the end of January. But it has been in place for a long time, for about 10 years. So in some ways, it has been, a success to last for this long. Part of it has been a clash of cultures. MSC is, it's not a listed company, unlike Maersk, and it's known for kind of being very ambitious and pretty hard charging. It likes to think of itself as very nimble and flexible. Maersk, in some ways, is a bit more conservative. There's been this focus on throughout its history on reliability for customers and making sure that ships depart and arrive on time. MSC's culture has been, in some ways, there've been examples of it, delaying ships beyond their departure time until it can get more containers on board, and then allowing it to set sail at that point. So in some ways, there's always a clash of cultures, and probably put those different cultures put under a lot of strain by what the shipping market has gone through, particularly since the COVID pandemic and the massive sort of downswing and then the upswing that the industry involved in then. And now they've got to a point where they think they're better off going their separate ways.
I mean, if we learned anything in the pandemic, it's just how much shipping feeds into inflation concerns. What are likely going to be the ripple effects of this for global shipping and therefore for inflation?
That's a big question. In some ways, there might be a sort of silver lining for customers here and global consumers if the breakup of the 2M alliance leads to lower freight rates, leads to lower rates for container shipping. That might be one result. Or, of course, it's difficult to tell at the moment. Maersk is, of course, going into another alliance with Hapag-Lloyd, this Gemini alliance. So it's not, that in and of itself doesn't suggest that it will be a sort of competitive free-for-all between the big container shipping companies. We'll have to see over time, but there is the possibility that this increases competition somewhat and leads to the big shipping companies reducing their rates over time.
All right, Paul Wallace, leading Bloomberg's MENA economy and government coverage. We thank you for bringing us that big take. Do check it out on the terminal. But just in our last few moments here, let's check in on these markets as we head towards the European Open. We've got equity futures pointing lower on both sides of the Atlantic. S&P E-mini futures down 1.2% now, both still recovering from Trump's tariff threat on Colombia, though that has been withdrawn. Also, these fears that China's DeepSeek is going to disrupt the tech world, though that's good news, perhaps, if you're in Asia. But that does it for the Horizons Middle East and Africa show. I've been Lizzie Burden in London. Jennifer Sabasaja was with me in Johannesburg. Tom McKenzie will be with you for the next hour. That'll be Daybreak Europe. Plenty to take you through in a busy week, not least for central banks. Thanks for being with us. This is Bloomberg.